Hello, welcome to FountainFX on Thursday the 5th of June 2014. We are looking at the news, and particularly at 1:45 today was the euro minimum bid rate. Now it's predicted to drop from 0.25% down to 0.1%. Now they haven't done that in its entirety, they've brought it down to 0.15%. So while it's showing a green indication, saying that's very positive, there's another way of looking at it, because they've had to drop the base rate from 0.25%, which therefore would indicate there's problems in Europe. However, not as low as what they originally forecast. So let's see how that reaction was seen by the markets. And if we look on the euro US dollar on the daily chart, we can see that the actual MACD is pushing up. So it's saying, you know, there's upwards momentum. However, with the news today, what have we seen? We've seen a massive amount of volatility. Look at the length of these wicks here. Price was previously bouncing along at the 135.90, which is a previous area of support here. And we marked on this various other lines another area of support just below there, which is the wick from this candlestick here. And then we've got support right the way down here at the 134.80 level. And what's happened is that because of this news, the market has reacted with a huge amount of volatility, whipping up and down. If we go down into the 1 hour, you'll be able to see that a lot clearer. And you can see just how much it has spiked. It honoured this area of resistance at the top, but we can see that it has actually seen it as being a negative reaction for the euro. Price has pushed down on the euro against the US dollar has fallen. Now, the thing is, often what you would expect to have seen is a reaction to the news before it came out, which was you'd have seen the euro falling off, but it wasn't. It actually was supported by this area of support here at the 135.90, as I said, and it's only when the news has come out that we actually saw price from where it was at the 136.14 rally all the way up to previous area of resistance at the 130. Just to check that 136.20 area, and then turn and fall. And if you look how much volatility there was in the market, it went from the 136.42. My eyes are failing me. 136.42, and it's gone all the way down to the 135.11. So, you know, 130 points move in a couple of hours. So quite a lot of volatility there, and it's literally pushed down, turned, and rallied all the way back up again. So it's with this kind of reaction that it just shows you that there's no real clear indication in terms of what the news means. Let's just double check what the time was on this when it came out. There you go, that was at 2 o'clock. So it's just after the news. That one closed at 2 o'clock. So the news broke in this as this candlestick formed, which would have caused it this big reaction. So the initial reaction was, hey, it's better than it was. And then, oh no, it's still worse than it was before, and we see it all the way fall. But when you see this level of volatility, there's various different ways of trading the news, and what I can do is I can share that strategy with you, but I'm not going to do it now. But we can see that the price has moved 130 points up and down. That would have been a great opportunity to be made. So what we will do is we'll share some strategies on how to trade the news in future blogs. But for now, that's the reaction. This was the big news of the week. Everyone's sitting there waiting for it, and we can now see the prices reacted up and down. Big sort of blip. Anyway, thank you very much from FountainFX, and we will catch you tomorrow. Bye-bye.